In this video, I am going to help people who I often find struggle to decide whether they should trade short term or whether they should be trading long term. Basically, you have to decide whether you want to be a short term trader, also known as intraday or scalpers, or you want to be a long term trader, usually swing traders or position traders. And there are advantages and disadvantages to both approaches when it comes to trading. So we'll just look into some of the advantages and some of the disadvantages of each approach. So I hope you have a pen and paper so that you can take maybe a few notes. So, what do we mean by short-term trading and long-term trading? Short-term trading, it depends with people. Sometimes, for some, the barrier or the limit is here, the 1 hour chart, the 1 hour time frame. Anything below this, the 30 minute, the 15 minute, 5 minute, as well as the 1 minute, we consider it what? Short term trading, because you are entering into trades and holding those trades only for a few minutes or maybe up to an hour, and you close your trade and you move on. Whereas where people who are entering on the 4 hourly, this is the 4 hourly. Usually, when you are entering on the 4 hourly, you are expecting to hold those trades even up to a day or 2 days, or sometimes, depending on the position, even up to a week. Then, for people who actually are trading on the daily, now this is serious long term. Are there people who take trades on the daily? Yes. Why do people take trades on the daily? Let's just click on the daily. You can see here, if you are on the higher time frames on the daily chart that we have here, it's very easy to sell here and hold what? In the ideal conditions, hold for 1, 2, 3, 4, 5 days. 5 days, and you just collect. Let's say this is just a theoretical example. It doesn't always work this way. So you can easily collect your 300 pips right there without the need to go in, go out, go in, go out into trades. So those are some of the things that you all need to think about, whether you want to be a short-term trader or a long-term trader. But it's not to say that short-term trading is bad. So, what are the advantages of short-term trading? Maybe let's just drop down to the 15 minute. I know the 15 minute is a popular time frame with people who do short-term trading and scalping and things like that. Okay, so one may be worry about short-term trading. Unfortunately, I'm going to start with a disadvantage here. But you should note it as you are deciding whether you want to do long-term trading or short-term trading. One disadvantage with short-term trading is that you need to spend more time at your charts. That's one disadvantage. If you have time to spend at your charts, then it's not even a disadvantage. Well, you have got time. But for people who are working, for people who are doing other businesses like myself, you cannot afford to have time just sitting what at your charts, analyzing charts and watching out what's happening on the charts and trying to make money like several hours just looking at the charts, because you have other things that you need to address. So that's the first point that you need to note about short-term trading. It means more time on your charts, but it doesn't always necessarily mean because you spend more time on your charts, then you are going to make more money on during your trading. So The second point is also related to that, more opportunities, because you are on the lower time frames. If you are looking for opportunities, in terms of opportunities, the lower time frames, they beat the higher time frames hands down. You are going to have more opportunities for buying, more opportunities. You can see here there was an opportunity to buy, there was an opportunity to sell, there was an opportunity to buy, an opportunity to sell, an opportunity to sell, an opportunity to buy. If we go to the higher time frames, if we go to the higher time frames, you will find that these opportunities don't happen more often. This is where we were. These opportunities actually don't happen with the frequency. Let me say they happen. The opportunities for buying and selling are there, but the frequency in which they happen is way less than if somebody is at the lower time frames, short-term trading. Then, if you are also on the lower time frames, it's very easy to what to trade news, things like FOMC, like interest rate decisions, non-farm payroll. If you want to trade those, you need to be at the lower time frames. If you want to trade fundamentals for any forex pair, if you want to trade fundamentals, drop down to the lower time frames. If you go to the 4 hour or the daily, you barely notice anything happening in terms of fundamentals. That's one advantage of what short term trading. Uh, I think in a way, uh, this is the last point on short term trading. In a way, I think short term trading is less boring, especially for people who love the thrill of being in the markets. Uh, Short term trading is the way to go, because you are always there's always something happening. There's always something happening on the short term time frames. On the long term time frames, really, I'm not saying it's boring, because I do that. I'm trading on the higher time frames, long term trading. It's For me, it's not. It's I would not say boring, but it's not as exciting and thrilling and on the edge like short term trading, because really on the higher time frames, things are calmer. Things are very calm. You don't really see wild moves and wild that. You rarely see that. You rarely see that on the higher time frames. So the advantage of the higher time frame basically would be that it's very easy to work around. For example, like I said, if you have a job, if you've got a business, if you have a family commitments, the higher time frames, they are very good for you, because you can easily, for example, here we are on the 4 hour time frame, you can easily set a trade here and you go and do your other business, and hopefully by the time you come back, this has happened, and this might be the next day. So that day you probably take one trade, you go away, you come back the next day or the next couple of hours, and this has happened. You take a trade, you go away. This is 4 hours, 8 hours, 12 hours. That's 16 hours. That's what is it? 20 hours is 24 hours. So you can see this is a whole day's worth of trading this year. And let's say you are lucky and you just entered somewhere here. It means for the whole day you did not need to do anything else. You had time to what? To go to the beach. You had time to go dancing. You had time to go be with your family. You had time to go do your business and other things if you are studying and things like that. So the higher time frames are very easy to work with. Then, in terms of risk to reward ratios, obviously the higher time frames they win. That's where I said if you paid attention at the start of the video, At the lower time frames, you have more time at the charts, which is good, but it does not always equate to more money. Now, when we're talking about money, we are talking about risk to reward ratios. When you are on the lower time frames, you find that the risk reward ratios, let's just see, the risk to reward ratios. For example, you took a sell here, you probably have wanted to get out of here because you were not sure about this happening, whether it's going to come and take out your position. So your moves on the lower time frame, they are limited. They are quick moves, and you can certainly make money with them uh, if you have a good number of them that play out. If you have a good number of of them that play out, you can still make money. Let's not. There's no argument about that. But in terms of risk to reward ratios, you find that at the lower time frames, you probably are risking 1:1, 1:2, rarely 1:3, 1:4. You don't want to hold your trades for that low. But if you are on the higher time frames, it's very easy to what to place maybe your stop loss somewhere around here, and you can easily turn your position into 1:1:5, 1:1:10. I've seen people who do that on the higher time frames. So in terms of risk to reward ratios, you get better risk reward ratios on longer term trading, which is higher time frames, which is swing trading, position trading. In terms of position trading, we are now looking at like serious stuff. I've seen people who actually uh, can do this, can hold these trades. That's position trading. Position trading, you probably can hold a position for months. So, in an ideal situation, you probably spotted that we're going to sell somewhere here, and then you sold. And this is weekly time frame, and you sold. And the next thing is what? Let's do that. You can hold your trade. Let's say you hold your trade up to here. It's basically for you an easy 1,000 pips, easy, without doing anything else. Without doing anything else. This is the weekly, and people do that on the weekly. People do that on the daily as well. So on the high time frames, the risk to reward ratios obviously are way better. Less trades, but better trades and risk to reward ratio. Then obviously the other advantage of long-term trading is set and forget. Set and forget, like I showed you. Set and forget. You can easily set your trade and you go away and you do your business, and you don't have to worry about things. And if you put your stop loss in, your trailing stop in, and your TP in, that's all that you need to do. That's all that you need to do, and then you go away and you come back and see if the trade played out or if it didn't. Otherwise, that's basically it. Then I think one other crucial advantage for long-term trading versus short-term trading is that it's way easier to learn. That's just me. Feel free to disagree with me in the comment section below. When you're trading the higher time frames, trust me, it's very easy to just make a mistake, but that thing plays out eventually, especially if you have enough equity in your account to hold that drawdown. Uh, Sometimes you make mistakes, and because it's higher time frames, as long as you are going with the trend, as long as you are going with the trend, you will what eventually make money if you have enough equity in your account to hold that trade. For example, I'm just going to give a random example. For example, let's say somebody sold here, and certainly it looked like things were going against them. But if they had enough equity in their in their account, and this is the daily, and they are confident that the weekly, my computer is now slower. I don't know if it's the screen recorder. I think we're somewhere around here. If they are confident that the overall trend is in their favor, they will eventually make the money as long as they can survive that drawdown. So for me, the higher time frames is very easy for people to trade and very easy for people to learn. Very easy for people to learn. You can sell maybe on this candle, or maybe you sold on this candle. Let's say you sold on this candle or you sold on this candle, but you are confident that price is going to go down based on the higher time frames, the daily and the weekly and the monthly. It's very easy on the higher time frames to hold this drawdown, and eventually it goes your way. So yeah, I just thought let me put this video out there. Long term versus short term trading, the advantages of both approaches. What are you trading? Are you trading long term? Are you trading short term? Leave your comments in the comment section below. I'd like to hear what you think. For everything else, see the description box below. Otherwise, guys, I'll see you in the next video.